Yeah, welcome everyone. I'm pretty excited to be moderating this panel. My name is Dimitrios. I'm head of investments and crypto economics at Outlier Ventures. At Outlier, we're a decade in this industry, quite active across all stages as well as sectors within this industry. We're investing, we're supporting founders through our accelerator programs, running different accelerator programs with ecosystems as well as investment partners. Kicked off now the second Deepin related program with 1KX together as well as Peak. And yeah, what we all know about Deepin is how Deepin is reshaping the way we think about infrastructure. We're able to move centralized industries onto more decentralized, community-powered models. The tech is working. It is advancing, but these networks won't scale. These networks won't scale if not the right foundational models are being behind, which is economic models, governance structures, the right stakeholders backing these projects. And this is the core topic today, where we have investors actually not only funding, but shaping Deepin and the future of Deepin. I'm joined by strong investors in this space. I'm going to leave for everyone to introduce themselves, role, name, and maybe a three-liner why you're excited about Deepin as an investment opportunity.
Great. So I'm Rob Schmults. I'm a general partner with BlockChange Ventures. We're a generalist fund, but we've done, at least a dozen investments in the Deepin space, including some before it was called Deepin. So we were early in Filecoin, among other things. But anyone who's been here today, a lot of our portfolio companies have been featured. So Mawari, Spexy, Akave, among others. But we're excited about the space because I think it's a great bridge between Web3 and real-world demand, real-world use cases. So,
yeah, no, I echo all of that. I think, first of all, my name is Mahesh. I'm the founder of EV3, which is a venture firm mainly focused on Deepin, actually. So, our first fund was entirely Deepin. Our second one will still be majority Deepin. And I've been philosophically excited about this space for years. I started in private equity, but sort of when I saw what Helium was doing and some of the early stage stuff before it was called Deepin, kind of jumped headfirst in, first helping with tokenomics, helping run foundations and such. And then, end of 2022, jumped in on the investor side as well. So, we invest in Deepin projects at the earliest stage. We have a liquid fund as well. And we just try to help projects on the ground build and go to market and such.
Great. I'm SJ. I'm working at the investment team at Hashed. So Hashed is a global early stage venture capital. So we have around 150 portfolio companies around the world. And then one of our core investment thesis is to back the founders and teams who are trying to solve the real world problems using blockchain technology. So we invested in Story Protocol, which is our world's IP blockchain. And we also invested in WorldCoin, now rebranded as World Network, which is an open identity and financial network. So we've been monitoring and closely watching the Deepin space a lot, but we haven't been active that much compared to you guys here. But we're really excited to see this space growing to 7-8 figures of revenue and really meaningful install base. So I'm really excited for that. And I'm personally, as an investor, I spent roughly 8 years in Tencent at SoftBank doing a lot of early to growth stage investments in Web2. So I'm pretty new to here, but I could probably add some fresh new insights from the perspective of established Web2 business. Thank you.
Cool. Thank you, everyone. Really great introduction. So the next 20-25 minutes, we're going to break down a bit what opportunities we see on the investment side, as well as challenges, what the risks are investing in Deepin, but also the way investors assess projects, the way we assess sustainability, value creation, or whatever comes with it, as well as, if there are founders here in this group, what we're looking at with regards to founder profiles, but also if you want to raise capital, what piece of advice we might want to give you. So maybe to kick it off, what opportunity do you see investing in Deepin? But also, what do you see as challenges? especially compared to, the usual investments in Web3 that are more like digital Web3 native investments like DeFi or like some sort of metaverse NFT type of projects? Rob.
Well, maybe I'll start with the second part first. So again, I have to tell this audience that oftentimes what will really cause a project to catch fire is kind of a story, a vision. In the future, the following things will happen, right? And you can see massive, massive run-ups in valuation on the basis of that. Now, time will tell if those valuations hold true, but certainly in the short term, you see these massive valuations. So you get these story-based companies. Deepin has an interesting challenge in that they actually have real world metrics, right? And so sometimes it can actually be harder to tell this giant story because you're like, wow, in 5 years, it's going to be, X, Y, and Z, $1 billion. Wait a minute, they've only got, 10,000 now. And so your mind has trouble making the leap and believing the big story. So it's kind of a funny situation to be in where sometimes these companies can almost be punished for having real traction and real metrics, and it can take away from the story. I personally am, don't get me wrong, a good story is a good story. We're very metrics based in many ways in our investments. So I don't hold that against companies, but I think it can be a challenge for certain Deepin projects. And maybe I know you had a longer question, but why don't I make sure there's time for the panel as well?
No, I think you're spot on right. I mean, the biggest point that I would make out there to all the Deepin founders is like, you guys have it all to do. You have one of the hardest jobs in the world because you're building a demand side, a supply side. You got to make the tokenomics work. You got to make sure the software, like there's so many different things that you have to get right to make a Deepin network work. And then it doesn't grow the way like a, crypto business that you're used to, like a layer one does, where, you turn it on and day two, you have a bunch of speculators that are just giving you a bunch of volume. Like, the progress has to be linear for these kinds of networks because the scaling of the revenue and the demand is in line with the scaling of the supply side. I think a lot of projects in the last few years would go build out the entire supply side and then come back to do the demand side. That's still really hard because the demand side challenge, as a lot of projects have learned, requires building a business in a very different way than, crypto businesses are normally built. You need like BD people, you need go-to-market people, and the physical constraint just means that there isn't room to screw up because you're using your capital to help bootstrap some of these things. So, I mean, I have a ton of respect for Deepin founders more than anything because I think you have the hardest proposition in terms of putting all of these pieces together, making them work and sustaining them. But the other side of that, I would say, and it's why we named our firm Escape Velocity, is that if you get that right in the earlier stages, you can create something that will just kind of finance itself forever. And like where you don't have to go back to investors over and over again to raise bigger and bigger rounds. And I mean, that vision of being capital light, but doing something capital intensive, isn't a proposition that exists anywhere else in investing. And I always go back to this point with Deepin, like the internet's kind of made up of like all of this user generated content that powers it to some degree. And I mean, I sort of see a physical future powered by user generated services where people are providing these things directly and sort of not encumbered to corporations. And to your point, I think, that's a pretty story, but how do you show that in numbers? It takes longer than anyone expects. So, I think the most important thing you have to do is be patient.
Yeah, that's right. I'm like 100% agreed on the timeline. We need to have like really long-term kind of horizon we need to have as an investor. But like one of the really like interesting part, like really strong like advantage of Deepin projects compared to the others is that I think the defensibility, once you reach to the certain scale of network and supply and demand network, I think you cannot easily replace that, right? So it usually really takes time and a lot of capital to build that network sufficiently. But I think a lot of projects are reaching that scale so that none of the newcomers could easily easily replace that. And then as you mentioned, like once you reach that scale, is kind of really escaping, it's reaching to that like escape velocity. So I think that kind of defensibility is what is really interesting from the investment perspective.
You talked about metrics. What sort of metrics are you looking into when assessing, obviously, projects to invest in, but also afterwards when they're in the growth phase?
Yeah, it's a great question. I mean, and you're right to split it up, right? So when we first met Spexy, just to give an example, because some of you may have heard the talk earlier, there weren't really metrics yet, right? So it was more of a what do you have to believe? And for me, I never would have thought of Spexy as a Deepin beforehand. Once I see it, I can't unsee it. Like, oh, of course there are all these drones out here. Of course the pilots have nothing to do with them. Of course the imagery is going to be way better than satellite. It all just seems so obvious, but it wasn't beforehand, right? So in a way that going back to that dichotomy we said between story and metrics, the story has to make sense to begin with. But in a Deepin, and I really like the way Mahesh was describing it, you've also got to then connect the dots and say, okay, I have to believe the big story here, but then I have to believe everything around, can this team build out the demand side as well as the supply side? If it's a B2B business, can they build the B2B muscle to get that done? And so coming back to your question, those numbers will, in a sense, it's one of those annoying answers. It depends, right? So something like Silencio, which is in our portfolio, that's a different set of metrics that I'm looking at to see how they're building out their network and kind of winning in their market versus maybe a Mawari, which a lot of what their needs right now are around more of a B2B. Again, if you guys saw their talk today, winning that contract in Osaka is an important metric, right? They're very different. Anyway, I know that
makes
kind of
sense.
a non-answer, but
But I heard a lot from all three, supply, demand, and a lot of people are saying the difficulties with Deepin is you actually need first to have all the supply there because the demand will not come if the supply is not there. And I'm seeing already, shaking of it because you have been saying actually it needs to come in line. Compared to like when you build something in DeFi, a DEX, you can have a quick feedback loop of like users and developers and like get faster into like these adoption cycles. You have been shaking your head like, what are your thoughts on like the supply demand challenge?
No, it's a tricky question because it actually goes to what you were saying about metrics, right? Investors get excited when they see metrics that are going up and to the left, up and to the right, sorry. And at the end of the day, what ended up happening in 2021 and such was the supply sides ended up getting built out really quickly, and you kind of had that metric going up and to the left. And the problem was, in some cases, that wasn't necessarily tied to where revenue would come from, where growth would come from, where the network would sort of proliferate from. And the result of that, I think, was you had a lot of these projects that built out these big supply sides and were sort of sitting around forever trying to figure out where the demand was going to come from. And in some cases, they've gone back and figured it out by changing the business model, by pivoting, by doing something different. All I was trying to say, or the head shake was trying to get at, is that if you're not testing that demand side traction as you're building the supply side, you could end up in these like excessively overbuilt scenarios that happens from time to time in the history of finance and always end extremely horribly. The clearest example to me was like between the 1840s and 1880s, we like overbuilt train capacities by 3x. And then between 1880 and 1910, there was like no demand for those trains, and the government had to come in and step in and bail all that out. It's the same thing kind of in private markets, whereby there's investors with a ton of capital that can kind of back projects with strong founders. But if you don't have that feedback loop, as you were saying, the right way, you don't necessarily know if you're building capacity that, will be extremely valuable long term. So bringing it back to metrics is the most important thing. One of the things we tried to do for the space is we created this platform called DePIN Ninja, like simple outsourced data analytics platform, just trying to unify data across the space a little bit, give people a place that they can go back to on a repeated basis, and therefore be able to think through sort of what some of these comparable statistics are as a way to kind of make decisions. And that's up and down because, to your point, people look at DePIN Ninja and they're like, okay, these projects have $5-10 million of revenue. All these DeFi things are doing 500 mil, but it's just different at the end of the day because the hardware build out will take time in itself. You then have to go through this feedback loop, and then you find viral product market fit, and then you have to build out supply and demand at the same time.
But I think just agree with you. A point SJ was making before about the stickiness and actually building a defensible, right? It's been much harder, I think, and I'm not saying this because I think you agree. I'm looking at you like I'm challenging you, but a lot of these DeFi things, the liquidity just jumps so quickly. Sure. And I think what we're hopefully seeing with a lot of these Deepin projects, and this is the point SJ was making earlier, they're not jumping, right? I don't know if there needs to be a second Spexy if you're a drone pilot. You're like, this is great, right? Or a second Mawari if you're doing, AR, VR, et cetera. It's not that there can't be. There generally tend to be more than one market entrant, but we certainly see where you can build a lot of loyalty oftentimes you can build a defensible moat.
Yeah, one thing I'd add to that too, I totally agree. That is actually the one case where building out the supply side massively might actually help you. You have to do this feedback loop thing, but if you have a supply side built out, it makes it really hard for someone else to do the same thing, because that group of early adopters that paid $500 for your box, like, are they going to pay $500 for another box? Maybe, but they're probably more likely to try to prove out what you already have.
You want to add anything?
Oh, yeah, so like just for the demand side, I think there should be some like low-hanging fruit in certain verticals or sectors that government is really pushing some agenda to certain infrastructure or technology to be adopted by end consumers, or some kind of shift in consumer demand or enterprise demand. It creates some huge demand in certain infrastructure that Deepin can probably capitalize on. So I think if you can really find some product market fit before you really deploy the supply side, I think it could be really kind of like help you to scale really faster than other Deepin projects. And then I think for the metric side, I think because I see this like verticals like getting matured, and then it's not only valued by ARR. I think in the mid to long term, I think it could be probably measured by profitability, because as you mentioned, like in the long term, they could be these Deepin projects. I really believe that they could be self-sustaining their business, but like without any external financing needs. So I think if you reach that scale, like you'll be able to measure that, like not only by ARR but by like profitability. What is their gross profit, and then what is their bottom line profitability, except the token incentives in their profitability. So I think that could be the really interesting moment for all the Deepin projects in the long term. Yeah.
Okay, thank you, Emma. I want to touch again on like the supply side. So you mentioned a lot of the projects from like 2021 and kind of like what they did right or wrong, but like hyper financializing through like these incentives. The supply side, we had all the supply there, demand didn't kick in, reality check in. Now, when you assess projects, what are sort of indicators that you're looking at in the early phase? I understand metrics, right? But obviously, like you mentioned before, like obviously more resources necessary, like you need to run BD and so on. But the difficulty that I see is, Deepin is basically touching in a lot of existing industry sectors like energy, mobility, airspace, whatsoever. Like it's really hard to have this expertise in all these areas.
No, 100%. Maybe I'll start with one and then others can jump in. I think you have to have really thoughtful tokenomics tied to your supply side. So like there has to be a very thoughtful feedback loop around how you are incentivizing someone and the return you're getting for the incentive that you're paying out. And I think, 2020, 2021 type projects in their first iterations were kind of just throwing around incentives and hoping something might show up. And, in some cases that worked really powerfully to build something out. But again, it goes back to this BD problem of if it works so quickly, you don't know if there's actually anything there to monetize on the revenue side. So it's an interesting one at the end of the day, because the supply side itself, there isn't really a metric that you can look at and be like, this is working, this is not. I think what you have to be judging is whether the people that you're bringing into your network are net contributing in a way beyond just maybe providing the service. So we backed this company called Opacity, like super out there idea, but allows you to bootstrap your reputation in Web3 on the basis of Web2 data. So like I can prove that I'm a 5-star Uber driver. And then if I want to use a food delivery app or like a decentralized rideshare app, I can show that I'm an exceptional driver in Web2 and get better incentives. And when you build these kinds of funnels, I mean, the Hivemapper guys have done a really smart thing with the boosts as well. Like they're being extremely thoughtful about where you're actually giving people tokens and creating structures whereby value additive actions are really the things being rewarded most. So that's kind of why it matters to understand the demand side a little bit as well, because otherwise you're not going to be able to tool your tokenomics in a way whereby you're actually adding value by bringing people in that are going to sustain and do more than just kind of contribute. Because a big part of these networks, I think, is just like the viral power of a community that'll show you.
I think another part we can consider is that like I think there are certain verticals and sectors that already there are some distributed networks, not probably decentralized networks, so that you can easily like tap on like existing distributed networks, so that you can utilize those infrastructure to be onboarded as a decentralized infrastructure. So I think like you can probably find some verticals or niches that you can really easily tackle on, so that you can kind of like really solve the supply side problem really easily. Yeah.
And I just add, I would love both those answers. I would add, we can't be an expert in all the spaces that we're seeing Deepin, being applied to, as your question makes clear. But I think, anyone who didn't see it or go watch the video of Tom's excellent description of Fluence, like that's a great example. We met the Fluence team and we said, wait, they've found some white space here. They're not trying to be the 16th or 20th GPU network. They've said there's a really big opportunity in CPUs. And to this day, they're still pretty distinctive in that. And their go-to-market is distinctive. So we, while not experts in CPU networks, we're able to talk to those founders and say, wow, you guys have found a believable white space. It can also show up in other ways, right? So I know I've mentioned Spexy a bunch, but they're another good example here. We can look at Spexy and say, wait a minute, if you can create a scaled data asset, I don't want to say we've never seen that not work, but generally we live in a world where the value of data only increases to go up, and the demand for that data, right? AI being a key driver, but is also increasing to go up. So we could get very comfortable saying we think this is going to work because they've got a scalable way to create a new data asset that didn't exist before.
I want to move a bit into really the trends, because you touched on we don't have to fund the 10th GPU computational network, and Deepin, in my opinion, has a big chance actually to onboard users into Web3, and not anymore the target user base to be just the degens in the Web3 being in the trenches and just hyper incentivizing them to quickly onboard and then have them leave again through other attacks and whatsoever. So what sort of trends do you guys see at the moment coming in? And
And just generally in this is
in the Deepin space.
Yeah. No, I know. I sort of alluded to this earlier. I don't know if it's a trend, but I'll call it one just for the sake of my answer. I'm sort of constantly amazed at while there are a lot of projects that are copycats, of course, right? That's true in every industry. The creativity of oftentimes founders that come from a area of domain expertise and then discover the Deepin model and say, wait a minute, I can unlock a market here. So I think I already said this earlier. I couldn't have predicted Spexy until I met Spexy. And then it all seems obvious. And I'm sure that probably all three of us are going to see a project, maybe someone sitting in this audience, or maybe it's later today or it's next week or whatever. We're like, oh my gosh, what an unlock. I didn't realize that fill in blank, had this opportunity. So I think that trend's going to continue, where we're going to keep seeing new and innovative applications of the model, often coming from outside of the Web3 space, where a team has deep domain expertise, deep knowledge, and then discovers Deepin and says, wow, this is the unlock that I was looking for.
It's funny. I was actually about to say almost exactly the same thing. It's crazy. Just even since Trump came into office, the number of founders that built something in Web 2 aren't necessarily sure they want to continue in that direction, have 20, 30 million bucks of revenue and just want to figure out how to decentralize their supply side and make it a permissionless autonomous model. I've probably had 100 of those conversations literally since the election. So the velocity, I think, of exceptional domain experts coming into space is increasing at a rapid clip. And I think you're starting to see that happen across a bunch of different industries. Deepin is a little bit of it doesn't always necessarily describe exactly everything that is represented by the industry. There's so many different verticals. Some of these verticals already have trillions of dollars of revenue and are the foundation of how we live our lives, whether that's energy or wireless or computer, any of these things. And I think you're going to see a number of projects in each of those verticals break out with very different models, because the white space of what using flexible tokens lets you do is actually way broader than people realize when you consider the financing side of all this. I mean, infrastructure for the longest time has been financed in the craziest ways using government financing, asset-backed debt, all these kinds of things. And what you can actually do with tokens is unbelievable in terms of figuring out interesting ways to, allocate that value. So I think I'm seeing exceptional founders from outside of crypto that really want to jump into one of these verticals and have a ton of domain expertise, but kind of need to figure out the crypto side. And that's an opportunity for anyone and everyone that, is crypto native or spending a lot of time in these markets.
Yeah, I think one of those sectors and verticals, like one of the really strong potential, is that I think is around like physical AI and robotics, because I think a lot of different projects have been focusing on providing compute and resources for a lot of AI agents and AI software. But I think the next frontier of crypto/AI could be around like physical AI and robotics, because I think in physical AI you need a lot of like different kind of you have a lot of challenges, not only in like coordinating all these robots in different verticals, but also about one of the key challenges about like collecting the high quality data, like to train like humanoid robots or a lot of different robots on different verticals. So I think because Deepin itself is essentially about like connecting physical infrastructure on the decentralized manner. But I think if you can really tackle like any challenges of robotics or robotics AI companies have in a way that like Deepin has solved all the other critical infrastructure we have, I think that could be a really interesting in the next like few years. Yeah.
We have. Oh, you wanted to add some? Go. I want to go to the. Well, the next one is actually that we've covered quite a lot of themes today, and I'm pretty excited to get your insights. And I'm looking at the time; we have like 3.5 minutes left. And before we close it out, I would like to hear from each of you. Like, what is the one piece of advice you would give to founders building in the space, but also want to raise capital? And then we would leave room for questions. And
I would say like because I think we are dealing the critical infrastructure which is really important to like humanity and all of our lives, like all the society. So I think you always need to have really long-term kind of a vision and long-term perspective on building your business. So you're kind of building the critical infrastructure of we all rely on. So I think we will probably need to have investors and partners on board who have similar like long-term horizon on your business building. So I think they would probably encourage you regardless of all the volatile crypto market. So I think that they would be the one I would have. Yeah.
Yeah. I mean, mine's simple. It's just jump. Like if you have a project, jump, do it, start it. It's an amazing thing what's happened with regards to social media and coordination over the last 5 years, whereby all of these venture capitalists from the 70s and 80s used to like harp on this idea that, you know, Silicon Valley was special because there's all these people that were in the same area and therefore they could work together and they solved problems easier because they kind of all knew each other. Like that exact same dynamic is happening on the internet today, whether it's powered by Twitter or Discord or any of these things. You can get to pretty much anyone you want to get to if you're motivated enough and if you have an idea that you really believe in. So, I mean, my biggest piece of advice is like a lot of the regulatory hurdles are kind of gone now. There's a ton of capital in the space that's looking for really smart founders. If you have an idea and you're extremely passionate about it and you have domain expertise in particular, just jump. Like, honestly, you'll find capital and you'll find partners.
Yeah, I think that's all great advice. I would say, and I think that I'm echoing maybe if there's some themes up here, this is one of them, which is, you know, remember that just because it's Deepin, just because you have a token, doesn't mean you're not still building a business. And therefore, you need to think about the commercialization side of things. You need to think about, as myself and the other panelists up here have said, about, you know, building demand and kind of understanding. You don't have to get it right, like the way you know, you were just saying about, you know, just jump. You're going to zig and zag as you get from here to there, but at least have kind of a target market in mind and a target customer set in mind. So you kind of have some sense of what you're building toward. And then to the degree you can, go out and talk to that target customer, go out and talk to that target market, because that's how you end up building great products and find product market fit. It's not sitting in at home with a whiteboard and coming it up with all on your own. It's getting out and really understanding your target customer.
thank you, guys. We have 1 minute left. Should we open questions?
Sure. If you're going to take one question, let's go for it. One question. Depending on...
Thank you. How do you guys see the orchestration part of Deepin working? So I'm assuming the orchestration would be on the application developer to organize whether it's like what Docker containers that get deployed or you know, some sort of a Kubernetes setup that on the fly deploys these containers somewhere on the network. Like, have you guys seen the use cases and how that pans out for developers building on the infrastructure?
I mean, I think we're seeing that there are starting to emerge aggregators and service providers targeting Deepin broadly. So I think generally you'll be right that the orchestration will sit with the company, the project building out the Deepin because they'll want it that way. But I don't think that'll be the only answer. And we may see over time progressively more and more you go to a specialized provider. We've certainly seen that with prior tech waves too. So
yeah, things start in absolutes and then they end up becoming modular. It's honestly the easiest way to describe it.
So the Deepin companies themselves are providing the orchestration.
It could be a third-party service, right? So you used to have to run your own servers on-prem to do anything online. And now you can, go to AWS or Azure, just as an example. And Tom's going to get mad at me, so I'm going to shut up.